Let us discuss all the pros and cons of the marketplaces as a business model, because from the perspective of the SME customer, it looks like a really perfect solution in two situations. For example, here in Poland, we have 12 factoring companies offering fully digital or partially digital factoring process. So when I'm an SME, I don't remember all 12 when I want to finance my invoice. So then the marketplace is the ideal place that I upload my invoice, or if the mandatory invoicing is not here, or just give a consent for the using my invoice data if it's on place. And also could be another situation in the market when there is no digital factoring offers at all, and I'm as SME customer do prefer one, and I can use it in the marketplace. So for SME, it looks like really a good offer. So let's discuss how it's in life, what are the pros and cons. And Ivan, I will start with you. Do you have already your first customers?
Yeah, since our launch last week, we have 50 new customers, not yet factoring. Haven't used factoring still, but we didn't start as a factoring marketplace as such, because all those people have cash flow problems. Our customers are actually mostly in transport, and very small companies. They don't have financial departments within their companies. They usually an owner and couple of employees in there, and they are doing everything manually in Excel tables and things like that. So in a way, they are trying to use our app as a tool to help them out in their daily activities to follow the finances, because they're all aware. I think all small business owners are aware of the financial problems that they are in. And we're just offering them factoring marketplace as one of the ways to get out of the liquidity problems.
All right, yeah. Very good example, and also the only example, I guess, that this is a mobile application only, right?
Yes, it's mobile only application. I have just the reason for this is because everybody has their mobile with them all the time, and most of them don't even have time to use their laptops or whatever, and they just need time, especially if they are in tracking business or something like that. They're always on the road.
All right, yes, and you said during the presentation that you're using actually the data from the mandatory invoicing implemented in Serbia already. All right, iFactor, present on the market 5 years already, right? What is your business model? How many invoices you are financing? I know also that you are integrating or onboarding private investors to finance the invoices. The same is in Roger's case. So tell us more about you.
Hello, everyone. Thanks for having me. Indeed, we started a few years ago, and the model that we thought it was kind of a first stage of the fintech that we've built. And I apologize. Thank you very much. Very kind of you, thank you. So,
just give a second.
Is that video so important? I'm thinking. No. Okay. So, when we started, we thought that we should build a model that will disrupt the market. We are a team that is very much into developing innovation, and we really think that financial inclusion is far from being in fact solved, and in terms of SMEs even further than probably in other sections. So we started as a marketplace. First, we looked into a model where we were a white label, following a banker's idea. Then we followed my idea to become a competitor to banks, becoming a peer-to-peer platform where private investors were bidding for these applications for invoice discounting. And then we realized soon that still the trust is in the hands of the banks. So we become the first European hybrid marketplace where banks and private investors could bid for the applications. Therefore, we signed at the time number one bank in Romania, Banca Transilvania. Later stages, we signed some others. So we started to do so. But we fall into exactly the things that we were talking about. Christian earlier was mentioning how difficult it is to make conversion because of the education, or at least the low financial literacy of the entrepreneurs. Nevertheless, also the high net worth individuals, sometimes they have a low financial literacy, so it's very difficult to keep the balance of the marketplace as long as you have such scattered and very heterogeneous profiles, And then it was mentioned by Pragma that they spent some money in Google AdWords. And that's a linear growth type of and totally incremental line. So it will not make any disruption. It will not make any actually much better improvement in anything. So what we've realized that actually years ago, we've realized that people and entrepreneurs, they need money and they don't have education, but they might need it. So what we've done, we pivoted. So today we are selling a SaaS model. So we've developed a technology, which we called before the generative AI, we were calling a semantic model, where private investors and banks could actually use technology for underwriting and understanding, not alone for factoring, but even further to other lending products, business lending products, to better understand what is the risk and what is the credit worthiness against, or the capability of reimbursement of these companies. So we started to build an intelligence service, developing a lot of technologies to scrape data and capture data from any kind of support. And we ended up winning some contests in Europe with banks and acceleration programs. And we identified an opportunity to pivot and sell this technology to banks to use this, and not only banks actually, any kind of, enterprise, large distributor in supply chain and anything, to actually analyze, to do the know your partner, know your customer, and underwriting process, AML, all the process behind. So today we do run the marketplace still, but we are not spending. In 2023, we spent zero money on Facebook ads or Google AdWords or anything else.
What are your channels of acquisition for a marketplace then?
We acquire customers mostly through indeed some search engine optimization, which is quite low in terms of conversion. But in fact, we actually leveraged a lot the partnerships that we have with banks, because even if they have their own factoring departments, for example, or other lending products, with our technology, the cost of underwriting became obsolete, and they managed to go with non-guaranteed loans or even invoice discounting from, minimum 20K, like a few years ago. It was Banca Transilvania that was performing. With us, they managed to do 15 days with 1,500 euro, and the cost was still effective. So, in fact, we achieved this new step and this new stage in which the lender could perform the underwriting with a much lower cost by using and leveraging AI and other technologies. So basically, I don't think that we should still focus on financial products. I think that tomorrow's lending will be, at least in the SME space, it will be technology being able to understand better than the entrepreneur with that low financial literacy. Again, something that I've learned during this path is that banks were trying for ages to educate entrepreneurs, and they couldn't. And we may actually made a test, and at some point we made a Facebook channel for entrepreneurs with the largest billing system in Romania. It's called Smart Bill. And we had there a community of something like 10,000 entrepreneurs. And then with our AI, we tried to actually build up the archetypes. And we identified at least 120 plus. So this means something so heterogeneous that it's very difficult to actually be able to educate them, and how. So that's the point. I don't think we should educate them. We should give them a product that would be so fit to their needs that will be adopted, and that's it.
So easy. Yeah. Adam, what about Roger and Czech Republic?
So first of all, thank you for inviting me. I've enjoyed very much the fraud discussions. I have seen several angles that I haven't seen before, and I am very inspired. So thank you for having me.
Of course.
Briefly about Roger, we are a platform. Around 80% or 75% of our volumes come from supply chain financing. We have 17 supply chain financing programs, mainly with the largest e-commerce businesses in Czech Republic and Slovakia. We present in logistics and also telco. The rest of the 25% is the traditional factoring. So we have started as a peer-to-peer platform back in 2013 because we didn't have any money. So we started as a peer-to-peer platform. That got better. As of end of last year, we had about 100 million euros on our books, out of which around 40 million euros are banks, 40 million are funds, and about 20 million are high net worth individuals. Obviously, the group of high net worth individuals is the largest in terms of numbers. It's about 1,500 of them. And the main sources of the receivables coming to our platform is obviously the SCF programs, which are driven by the buyers. So they are very motivated to send the invoices in our way because it's good for their supply chain. We also are partially owned by a company called Grid. Grid is the largest provider of electronic data interchange in Czech Republic. And we have exclusivity deal together, so we kind of have a flow of about 30 million of invoices every year that we can finance on, and they are digital and we can rely on them. So the fraud risk on those is low. And that actually was the game changer for us to create a platform, a marketplace, if you like, where the receivable is a commodity. So we have a receivable that is confirmed by the buyer. We can buy a rating from Crave or Dun Bradstreet or whoever you like. We put the rating there, and because we are a payment institution, we also do all the clearing. So the investors, the only thing they have to do is put down their offer. And obviously that's simple enough for loads of high net worth individuals or investment funds. It has proven not to be simple enough for a lot of banks. So so that's an ongoing challenge for us.
You mentioned you have one bank boarded.
We have one bank as a shareholder. So Societe Generale has 25% of Roger. And obviously, it's good that we cooperate also with Erste, and it's good to have a bank as a shareholder from many perspectives. Also, it's very tricky because the other banks are looking at you as a competitor.
Yeah, is it?
Yeah. So it's a tricky position to be in.
But are you searching for another banks to join the platform, or this is not your?
Yeah,
target?
I mean, we are probably going to onboard 2 other large banks from Czech within a couple of months. This process has taken over a year for us with both of them. When I was speaking to some of the global market leaders, that's not something unusual. It normally takes between 6 to 18 months to onboard a bank to a platform, to a CF platform. And it's not only about onboarding them, but it's also making our systems work in a way that we are going to do everything for them. So they are not going to be accessing our platform. We need to fetch all the data in the formats that they are used to their platforms and prepare it in a way that it's not going to interfere or design any changes to their internal processes, because once you get into that, it's become impossible to onboard them. So it's actually tricky for us to bend our systems in a way that the invoices are shipped in the right structures to the bank.
And do you plan to integrate some fintechs for transfactoring, for example, present on Czech market? If it's also a
look, how I look at the marketplace, for me, it is about making the chain as short as possible. So on one side, you have an individual or unit or whoever with excess cash, okay? On the other side, you have someone who needs the cash, usually the entrepreneur, the SME. And I think that the chain should be as short as possible. So I do like to see that there are not a lot of intermediaries. So if you look at the independent factoring platforms or companies, they usually are funded by funds, and those funds are funded by private individuals, and you have a lot of middlemen. So I tend to make the chain as short as possible. It's not a dogma, obviously, but we are not intending to advertise ourselves as a platform for factoring companies. And also the Czech market has been set up in a way that there are 5 factoring companies from a bank that has been there since ever, and one independent BB Financial Services, and some startups coming and leaving. So it's specific.
Yeah. Ivan, you integrated with, you showed 4 factoring companies, fintechs, we call them like that, independent one, not connected with the banking groups. What is your target here? And
we're not looking at the banks at the moment, just because the banks don't see those small clients that we are targeting as good enough for them to offer them factoring. Some of you were saying, I think it was actually Adam that mentioned it earlier, that they earn about 3,000 or something like from the small company a year, like in revenue, and it doesn't just it's not good enough for them to offer. But the companies that we are targeting are completely under the radar for the banks in any way. They're small companies, all they can ask for credit, but they're not that, especially if they're young companies, they don't have a credit rating or something like that. So they're the ones that are using our products at the moment, and we are looking forward to actually having integrations with the factoring companies such as Instant Factoring, FinSpot, and the likes.
Digital ones.
Yeah, digital ones, because our market is actually their market, the same one.
Do we have this video? What's the latest?
I don't know. We'll see it later on.
Can we show the video? No, there is no. Okay. Are there any questions to the marketplaces? Yes, Martins, and then to Derek, please.
Hello. I wondered how on your marketplaces interest rate, how it compares with a market price, or is banking price? Is it like the lowest on the market, highest in the middle? How it compares? And is cutting out the middlemen, etc. Does it help on the interest rate?
Lower?
So we have a data for last 10 years, okay? And the base rate now in Czech Republic, I think, is 5.25, and investors on the platform are getting somewhere around 9% all in. So before the 2020, when the base rates were 0 or slightly below 0, we were seeing interest rates around 4%, and it's actually the same situation. So we see that the investor on our platform requires around 350 to 450 above the base rate. And when I say base rate, I really don't mean base rate, I mean saving account. Yeah, because there is a certain delay, not going down, but going up, there was a delay. So we actually came to the point where the hikes of the Czech National Bank were so fast and the money from the bank was so expensive, and the investors were not getting enough money on their saving account. So we were actually cheaper than the banks for some period of the time, but that's not a stable environment. But we really 400 basis over base rate.
In our case, we started being first cheaper in 2019 than the bank because high net worth individuals were performing lower interest rates on whatever they were buying on the platform. So we tried as much as possible, including the fee that we were perceiving to be under this. But at that time, we had more bankable tickets that were coming on the platform. If we take last year, for example, we had 92% of the customers were non-bankable from different perspective, compliance or whatever. And in all honesty, we had 28.2% annualized rate. It was the lending. So basically, they made a lot of money with our platform. And of course, it looks like entrepreneurs are ready to pay those amounts. And I was talking with Adam a bit earlier. We've got in the last few months, I think National Bank of Romania is now opening a new non-banking financial institutions license, and there are at least 20 now that are focusing on factoring, including a lot of investors from Poland or Czech Republic coming to the Romanian market, exactly because it's extremely, the appetite is very high because of the return on investment. So yeah, and from the States, and I wouldn't mention, so we have a lot of, and everybody calls me because we are the only regulated peer-to-peer lending, and we have all the technology in place, and we can, and it's a fast track to start the market. So everybody's looking for that.
Mm-hmm. Ivan?
Well, we don't have anything yet, because nobody has sent anything because we just started, so we don't have the info on that.
All right. Can we have a microphone here to Derek? Not here, there.
Thank you. I've got a question to Adam, and it relates to an earlier experience that I have. Our first company was a robo-mortgage marketplace, you can call it. We called it an advisor, but we sold mortgages from 29 companies across Europe in very niche-based segments. We also had a bank investor, Aegon Bank. I heard you in your story, you have Société Générale. In hindsight, in my entrepreneurial development, I think that was a big mistake, having a bank investor in our company back then, because it challenged our independency. It had a lot of regulations brought into the company that we had to comply with. And well, if you would just have relied on private equity capital, that would have accelerated the growth enormously. So my question to you is, why in your strategy is relying on a bank important in accelerating and achieving your goals?
And you mean my strategy as an equity partner, or my strategy as a marketplace platform?
As a marketplace platform.
It is not a core piece of the strategy. We just opened a Roger Receivable Fund, like a SICAF for investors. We have seen that Allianz has Alvoca for supply chain financing fund. Pemberton Capital London has a whole fund. Goldman's have department for it. So somewhere I have read or heard that there is 2.5 trillion gap in SME financing, and it's not going to be filled by banking capital. It's going to be filled by funds, because the banks are not flexible enough to onboard all those SMEs. So it is part of my strategy to have banks on the platform, because they are good in covering the peaks. Because one of the biggest problems of our platform is that the SMEs have fear that they can't rely on it. It's a platform. The lines are uncommitted, right? And if you have more banks on the platform becoming stable and more reliable partner for SMEs, and bigger SMEs want more reliable partners. So yes, the banks are part of my strategy for funding. I am prepared not to have any, right? So it's good to have them on board, but my business is not going to collapse if they go or walk away.
Can I chip in with this? Is Société Générale through their VC arm, or is the bank itself? Because
it's through VC arm.
Sorry?
Through VC arm.
Okay, so then, yeah. Yeah, basically we chose in our strategy not to have any banks VCs, so corporate VCs from the banks. So we won, for example, Elevator Lab Grand Finale in Vienna. This is the Elevator Lab, Elevator Ventures is the VC arm of Raiffeisen in Vienna, but we never accepted equity from their side, although we work with Raiffeisen on the marketplace. Banca Transilvania the same. They proposed equity investment and we refused it, but we do work with them in terms of capital. So I guess, and at least what I've learned lately, especially if you're a technology company, and now here I'm not talking about a financial institution, literally, but a technology company, fintech, then of course you must be funded by the risk capital. And here, what they say lately is that, and I've seen some success stories, is that VCs can be very neutral from the bank, even if they come and their main LP is the bank. Like you have Portofolion from OTP, you have, for example, Elevator, you have many others, you have ING and others. So if you have two of them, then you become more neutral against the market than traditionally having one. That's what they say.
That's true. Thank you for both your answers. Still, my question remains. I understand that from a commercial point of view, it's good to have, market coverage, and banks are doing the majority in the market usually, so that's good to have them on the platform. But like you're saying, the gap that you're trying to fill will come from private equity, from other sources, from funds. So I learned that by participating too much, by engaging too much with the banks, all the regulations and all the nitty-gritty work that we had to do in the processes to connect to them slowed us, I think 3 or 4 years down, versus what we could have done when we would just have been funded by private equity and really were attacking the banks.
I could not agree more. It is it's hugely demanding for fintech to cooperate with a bank as a lender or having them on the platform. It is amazing the amount of work that we have to put in that, and that should be something that everyone should have in mind when they coming into this. That it's obviously giving a lot of credibility and credit and customer base and yada yada, but also it gives you a lot to comply with.
All right. Yes, and just to wrap up, very, very short question and last words from your side. How to make the marketplaces popular in the eyes of the SMEs? Ivan, first to you.
Well, I don't know how to make it popular in the eyes of the SMEs because, as I said, we're not trying to offer them a marketplace. We're trying to offer them a solution for them to see that they have a financial problem, and the marketplace is just one place where they can try and solve that liquidity problem. No more than that. So it's as everybody was saying, is that they try to educate them, offer them something, but it just keeps not getting any kind of a feedback from them. It just stays the same and it doesn't change at all. So I don't know if we can change anything. It's just that all they want, as everybody says, is just money. You give them money and that's all they need.
All right.
Actually.
So easy access to money.
Yeah.
Right? Osmin, Adam?
Well, I subscribe to Ivan. I mean, it's not the marketplace that you have to promote. It's the value proposition that you give to the customer, if that is done through different innovations, including marketplace, other technologies, enabling that, embedded options, then open finance or closed finance or closed banking, not open banking, because everybody's afraid of open banking. Why didn't they call it closed banking? Probably adoption would be higher.
Yep.
I think what we were focusing on a lot was the origination, how we do it, and needs to be seamless. So I would say that loads of our customers don't even know us. Like they never come across Roger really, because it's called ALSA invoice financing. It's labeled like they buyer. They don't actually know that they come into our interface. It's like what you were saying with the water. Yes, there is a packaging to it, but I'm not like massively promoting Roger logo and trying to get it into everyone's mind. I think it's about how we deliver the product, and as seamless as it gets, the more popular the marketplace will be. Like that's our mission.
Yeah. Thank you very much, Ivan, Cosmin, Adam.
Thank you.